The big driver of the overall cycle and liquidity and all of it is this business cycle. Liquidity leads it, but Bitcoin is actually highly correlated. Basically, when you cross 50, those are the white lines, which is what we're about to do. Cross 50 on the upside, that's when the real banana zone starts. And then when ISM peaks, that's normally when Bitcoin peaks as well. So we are only at the bottom of the ISM cycle. We're nowhere near the top. So what it tells me is the probability is this cycle is going to go longer or later.
It's been a great week for crypto asset prices. After a terrible sell-off that saw Bitcoin's price plunge below 90,000 for the first time in over a month on Monday, prices picked up sharply on Tuesday, hitting an intraday high of $97,000 on Tuesday. The leading cryptocurrency maintained the upper $90,000 range on Tuesday before another upside rally on Thursday that saw it finally recapture the $100,000 level, which it again maintained with steady gains. On Friday, Bitcoin surged to an intraday high of $105,246 per coin, marking another significant milestone in its ongoing rally. This impressive climb contributed to the broader expansion of the cryptocurrency market, which saw its collective valuation grow by 3.96%, reaching a remarkable $3.68 trillion. According to Real Vision founder and CEO Raoul Pal, we have now entered the second phase of the banana zone, which represents the stage of every crypto bull market where prices enter an exponential upward trajectory, often driven by speculative mania or excessive liquidity. In a tweet heralding the beginning of this important phase of the bull market, Pal wrote, "Is phase 2 of the banana zone in the room? Probably. The banana singularity, when everything goes up a lot. Don't f this up with leverage or being too far out the risk curve with too much of your portfolio. Just let it play out." This is not Pal's first prediction of the banana singularity, or banana zone phase 2. In one of his videos published in December, Pal predicted that we were nearly upon phase 2 of the banana zone, which he said would coincide with the much-anticipated altcoin season, with crypto prices rising even faster and more rapidly than phase 1. In the video, he added that this next phase of the bull market could begin very quickly as we enter the new year, taking Bitcoin and other cryptocurrencies to unprecedented highs in the blink of an eye. Is this much-anticipated phase finally here? The Real Vision CEO gives some in-depth analysis of the crypto bull market and the intersection with macro conditions in a recent video on his Raoul Pal The Journeyman YouTube channel. As we bring you clips from the video, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
Let's start with the elephant in the room, because you guys are nervous Nellies. Oh my God, everything is so scary. The crypto, it went down 5%. We're all going to die. I'm going to lose all my money. Didn't you show me this chart of global M2 and Bitcoin? Doesn't it mean the Bitcoin's going to 70,000? Calm the down. You all need to grow some cojones, and you need to learn stoicism, inner peace, meditate, do anything but stop bleating on Twitter about your fears all day. If we did that anywhere else, people will get really bored of us. I get really bored of it. So let me talk you through why you should stop your bleating. Firstly, in 2017, we had a new president of the United States that shocked everybody getting voted in, called Donald Trump. He came in on a ticket of tariffs and trade war and onshoring and tax cuts. And now we have a new president called Donald Trump, who is coming in a few days' time on a ticket of tariffs, trade wars, tax cuts, and deregulation. Sounds kind of familiar, right? Well, remember the M2 collapse that we're seeing now? And oh my God, my Bitcoin is going down to 70,000. Do I sell? Do I buy? What do I do? Help me. What does it mean for my shit coins? Okay. It all happened back then too. Global M2 sold off. That was because the dollar went up. So we had exactly the same repeating pattern, which kind of says that global M2 should probably base around here. Again, don't expect perfection, but expect some repeat. Oh, the NASDAQ did something similar too. It would suggest the NASDAQ should be going up pretty sharply now. And lo and behold, today, the NASDAQ has a really strong day. Feels about right. Old Trumpy boy's about to come in. But it's about the dollar. The dollar's been strong. That's what's been driving global M2. And guess what? It was identical back then too. Now, this chart's been copied by every on X because they're too lazy to do their own research. Started with us, as all these charts did. The M2 charts, all of them, was myself and Julian Battelle, a global macro investor, and then Real Vision Pro macro, and then we spread it further with the world, and they all get copied. But I guess it's flattering. What it's suggesting is Scott Bessent speaks, I think, tomorrow. He should start signaling, along with Steve Mirren, that the dollar is too strong and it needs to weaken. The dollar is being used as a weapon against China, Europe, Canada, and anybody else who has trade deals to do. They've all got weak currencies. It's a problem. The US also wants a weak dollar, but they know a strong dollar forces people to the table. But we also know they've already been negotiating. So what we're likely to see is talking the dollar lower from Scott Bessent. It is very important they do so because the US needs to increase its exports. Everybody needs the economic cycle to increase. The Chinese, well, we need them to stimulate because without the Chinese, we don't have a global economy. We have a lopsided economy. And for them to buy US goods, their economy needs to be growing. But they need to stimulate. But if they stimulate with the dollar too strong, their currency peg breaks. And they don't want to do that because then you get capital flight. So it's a very fine balancing act of geopolitics and economics and interconnectedness and this kind of global dollar system that they need the US to weaken the dollar. If the US weakens the dollar and injects liquidity into the eurodollar market, which is the offshore dollar market, the Chinese can access it and they can roll their dollar debts. They can start doing quantitative easing. They can start stimulating massively. The global economy can start recovering. They can start buying US goods. Everybody is a winner. So the dollar will come lower. I've known Scott for a long time, and he understands the big picture. Crypto, here's Bitcoin, following the same pattern roughly. 2017 has been my base case for a while. Do not expect it to be identical, but, and do not expect it to be going to wherever the scale says, I'm not looking for $1 million Bitcoin. Sure, there's a probability, but it's like 5%. But directionally, we should get this right, and it should continue to rally into the end of the year, into 2025, and maybe into early 26. We'll have to wait and see. But this is what the pattern tells us. It's repeating the same pattern. Bitcoin should be up only from here. And this is the typical post-correction halving. So what we have is the start of the banana zone, which we talked about from about September, and that was when Bitcoin hit 50,000. So the first banana zone phase one, that was this period here as we come up from the sell-off from the halving. Then we have the correction from the banana zone phase one. Happens every time. Then what do we get? The banana singularity. That's the next bit when everything just goes up and it makes us all look like geniuses. Every stupid shitcoin we've ever bought goes up. Everything goes up. And we think we're gods, which we're obviously not. We're probably just morons trying to do our best. But luckily, crypto market, it trends up over time. So it kind of covers all sins. As long as you're not too far out the shitcoin curve, you'll generally be fine over time, particularly if you don't this up and stick to the big ones. They generally do fine over time. So it can cover all of your sins, your terrible entry points, all your stupid mistakes. I think it'll be fine. So that's what I'm expecting next. We should be starting now. Let's talk about the dollar again. Dollar is a wrecking ball. A strong dollar lowers economic growth. The US Economic Surprises Index shows that it follows the dollar. The dollar has a 2-month lead. The dollar's strong. The economy slows down. So we're expecting to see the US economy slowing down over the next coming 2 months, and sharply so.
Raoul Pal has often highlighted the profound effects of a strong US dollar on the global economy and financial markets, including cryptocurrencies. He refers to this phenomenon as the dollar wrecking ball, illustrating how a rapidly appreciating dollar can cause significant disruptions worldwide. A stronger dollar increases the cost of servicing dollar-denominated debts, which many countries and businesses hold, leading to reduced liquidity and heightened financial strain across global markets. Pal suggests that President-elect Donald Trump is leveraging this wrecking ball as a tactical tool to pressure nations like China and Canada into adopting more favorable stances toward his policies ahead of his inauguration. However, Pal also emphasizes that this strategy is likely temporary due to its far-reaching implications for global economic stability. He predicts that once Trump assumes office, his proposed policies, such as imposing tariffs, pursuing fiscal expansion, and implementing measures aimed at domestic growth, will weaken the dollar over time. Powell argues that a weaker dollar under Trump's administration could spark a surge in global markets, creating a favorable environment for both traditional financial sectors and emerging assets like cryptocurrencies. The transition from a strong dollar policy to one centered on fiscal expansion could mark a pivotal shift, with the potential to redefine market dynamics and bolster economic growth on an international scale. Let's get back to the video.
Now, the ISM survey, which is the Institute Supply Manager Survey, is the best guide to the business cycle, comes out monthly, has been below 50. 50 is considered sort of very low growth, with below, let's say, 46 being recession. We flirted with recession many times. Never got there, but we've had a slow growth. Well, the economic growth has been relatively strong, and part of that has been pre-election stimulus effects. The other part has been the technology bifurcation. So technology, which has no debt, doesn't care about interest rates. In fact, all the cash earns more interest rates, just make more and more money. That's been exploding. While the services economy, the manufacturing economy, all of that has actually been very sluggish. So below 50, bad. Now, the new orders, which is a little more volatile, is starting to tick up. Suggests, you know what? We might all start earning a bit more money, i.e. our businesses earn a bit more money. Economic growth comes back in more meaningful ways for Main Street, for the average person who hasn't really felt like it's been boom time unless you're working in tech or you've been investing in crypto or the markets, I guess. But generally speaking, small cap stocks, all of that's driven by the earnings cycle, which is driven by the ISM. It's really delicious. So financial conditions lead it all. Financial conditions suggest that the ISM is going from 49.3 today to 55. 55 is not yet a full expansion. Look how far the ISM normally gets to. It kind of gets to 60. So that means that on a 9-month basis, the business cycle is going to be growing. Great. The economy is going to be booming, or at least doing a lot better. I think probably booming. And that matters for our crypto bags, because Bitcoin is actually correlated to the ISM. So here's our Bitcoin implied pricing. If we go up to an ISM of 60, we're kind of 300 plus thousand Bitcoin. And if we go higher, we get higher. The big driver of the overall cycle and liquidity and all of it is this business cycle. Liquidity leads it, but Bitcoin is actually highly correlated. Basically, when you cross 50, those are the white lines, which is what we're about to do. Cross 50 on the upside, that's when the real banana zone starts. And then when ISM peaks, that's normally when Bitcoin peaks as well. So we are only at the bottom of the ISM cycle. We're nowhere near the top. So what it tells me is the probability is this cycle is going to go longer or later than certainly the last cycle. Because last cycle, remember, Bitcoin peaked in ISM peaked in March 2021 at a huge level of like 63, 64. We are nowhere near. Even we haven't started the cycle yet. So it's all to play for, which is why it's going to be longer and back-end loaded, and it may go into 2026 first quarter. Let's see how it plays out, but that's looking like it to me. And I've been adjusting these probabilities, over time, but I've always had a decent probability that it's back-end loaded. I also think it might be a bigger cycle than expected. ISM, also a driver of the Bitcoin, of alt season. As ISM crosses 50, people have more money. Alt season starts increasing as people start reinvesting their money. So alt season is that. Small caps in regular equities, same kind of thing. Okay, where else are we? Trying to find the next chart. Macro seasons doesn't really matter, but that's all fine. Macro summer is where we are in the seasons. Just buy the dip. Part of the don't up philosophy is buy the dip. We are nowhere near the top. You've got nothing to fear except fear itself, or I don't know what you fear. I don't get it. I don't get it. It's just normal stuff, right? Market goes up, market goes down. You will get big drawdowns very quickly. You might shit your pants unless you've been around for a couple of cycles. That's fine. You can buy new underwear and it'll all be okay, because the market over time will go up until the business cycle peaks, the liquidity cycle peaks, the financial conditions peak. We're just on the way up. So there's nothing to worry about. Okay. Next chart. NASDAQ, this recent correction has also meant dips are for buying. So NASDAQ, number of stocks, a percentage of stocks trading above their 50-day moving average collapsed to the buy zone. Incredible. Great opportunity. Buy the NASDAQ. GMI cycle, Bitcoin cycle top finder, nowhere near. So just buy dips. Previous cycles, I don't think you probably can see all of these colors. We're the purple one. We think we're following the lighter purple one. And that seems to be playing out pretty well. So all good on that. You can see the little mini corrections after the first phase of the banana zone. Had our mini correction. Next phase, look at these puppies. That's what we're coming to. The next phase of the banana zone, the banana singularity, also known as alt season.
Meanwhile, institutional adoption of cryptocurrencies, especially Bitcoin, continues to accelerate rapidly. U.S. spot Bitcoin ETFs demonstrated remarkable resilience and investor confidence on Wednesday and Thursday, showcasing 2 days of robust inflows. According to SosaValue data, $626.15 million flowed into Bitcoin ETFs on January 16th, with BlackRock dominating by capturing $527.87 million of the total inflows. This follows a strong inflow of $755 million the previous day, bringing the 2-day total to an impressive $1.38 billion, effectively reversing the $1.22 billion outflows recorded over the prior 4 days. Other funds also participated in this influx of capital, with ARK and 21 Shares ARKB bringing in $155.44 million, VanEck HODL securing $5.68 million, and Fidelity's FBTC adding $4.39 million. However, Grayscale's GBTC bucked the trend, experiencing an outflow of $69.97 million. These inflows boosted the total net assets of Bitcoin ETFs to $114.82 billion, representing 5.78% of Bitcoin's market cap. Ether ETFs also joined the inflow momentum, with $166.59 million flowing in across the category, marking 3 consecutive days of positive net flows. BlackRock's Ether led the way with $111.19 million, while Fidelity's FETH added $70 million. Conversely, Grayscale's ETHE recorded the only outflow, losing $18.73 million, as other Ether ETFs remained neutral. With total net assets for Ether ETFs rising to $12 billion, the funds are poised for a strong finish to the week. This surge in ETF inflows reflects heightened investor confidence in digital assets, particularly as institutional players like BlackRock and Fidelity solidify their foothold in the cryptocurrency market. In a statement to Bitcoin.com News, Kurush Kanlu, the director of corporate strategy at Tradu.com, a multi-asset financial services platform, said, "Institutional adoption of crypto is accelerating rapidly, driving a notable rise in prices. This surge is fueled not only by the influx of funds flowing into crypto markets via institutional channels, but also by the involvement of major financial institutions, which lends significant credibility to the industry and strengthens investor confidence. Even traditionally risk-averse pensions funds are getting in on the action, enticed by the Bitcoin boom and potential lucrative returns on offer. Experts are predicting an even sharper rise in crypto asset prices in the coming days as the United States inaugurates its first pro-crypto president. Many are calling this the Trump pump, predicting it will ramp up rapidly after the January 20th inauguration as President-elect Donald Trump starts rolling out pro-crypto policies. Do you think this is a Trump pump? How high do you think crypto asset prices will go in the coming days? Please share your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. These actions help with the YouTube algorithm and immensely contribute to the channel's growth. Thanks for watching.